Hello, good afternoon. It's the last hour of trading session today for the week, and so far it's been okay. We are holding on to 20,180 at the Nifty level. Having said that, the broader markets have given up a bit of the gain. They are pretty much around the flat line. In fact, on an intraday basis, we managed to hit record high level not only for Nifty as well as Sensex, but PSU banking space. That's the one which has been roaring throughout the trading session, and that index has hit a fresh 52-week high, or rather a record high today. At all-time high levels, we have a lot of auto stocks as well. So, of course, Bajaj Auto is in the top gear right now, 5.5% higher, but M&M as well as CVS Motors too is sitting at all-time record high levels. IT, that's also doing okay. That TCS upgrade that we got from Aventis Spark is something that has sparked the rally on that one, and the likes of Intellect Design too are doing all right. Telecom, that one is too seeing quite a bit of buying interest today, because if you look at the stock of Vodafone Idea, that's higher by 8%. Indus Towers is doing well. So Street definitely looking at the broader markets and the beaten down themes to kind of probably look, because even the media names, especially the paper stocks, the likes of DB Corp, etc., are also doing quite all right. But having said all of this, Aisha, it's the mid caps which have lost the steam, but the large caps are holding out.
The large caps are holding out, in fact, comfortably so. We're almost at that 20,250 level for the Nifty futures, and that's a solid gain of about 76 odd points. It's clearly Bajaj Auto led by Hero MotoCorp and M&M, which is right on top. Of course, there is a brokerage node as well. Bank of America, remember, has upgraded now Bajaj Auto to a buy from the earlier neutral, raised their target prices also to 55.50. They're saying that all businesses are well positioned for FY25. So, a little bit of a longer term visibility, but that's something that the street is clearly liking, and you're seeing a big move on that particular stock. Saturn Credit Care, the analysts meet takeaways and strong growth and profitability guidance is what they've indicated. The core geographies continue to be Uttar Pradesh as well as Bihar, from where they expect maximum growth for them to kick in. That stock on a tear, about a 14% uptick is what you're seeing on this one. Oil, that clearly is, rubbing off its sensitivity on a lot of sectors. Of course, on the negative side, you've got paints, aviation, which even tires for that matter, wherein a large component of their RM cost is attributed to coal. But the headwinds clearly are continuing for a third consecutive weekly gain, and WTI crude, remember, is already at above that $90 per barrel mark, and Brent is already above 94. So that's leading to its move on a fair bit of sectors. OMCs, of course, they've been under pressure. ONGC, with its sensitivity, that stock is holding up the last time I checked. And like I mentioned, tires, paints, even cement for that matter, a lot of these sectors are sensitive to crude prices. But let's talk about the index. That seems to be in ship shape, not as much the market breadth. That's where we're currently split and divided, at least within the broader end of the market. But Kunal, what's it looking like for the index?
Yeah, it looks attractive even at current levels, because even though the last 2 days back or 2-3 days back when that selling happened for the overall market breadth, I think post that we've seen just change in tonality of sectors rather than the change in terms of index strength. So the Nifty has moved up higher. Bank Nifty has been one of the outperformers in not just the last couple of days, but even the last couple of weeks. And on the back of the short covering data, I would probably expect Bank Nifty to scale past about the new highs pretty quickly, maybe over the next 1 or 2 trading sessions, if not today. So I would be bullish on the banking index from current levels, and I think strongly PSU banking stocks are going through what we can probably call it as a second round of a breakout from 2022 second half, where these stocks rallied up significantly high. So the market breadth looks quite okay, but I think the important sector in terms of momentum is Bank Nifty, and within Bank Nifty specifically the PSU banks.
Well, yes, can't take your eyes away from the PSU banking space and the breakout that we are witnessing in banks as well. But the other sector which is breaking out, Naresh, is autos. What are the top stocks there?
So after every correction, it is Mahindra and Mahindra which keeps coming up sharply, and that's the leader which has remained the leader for some time. The stock is back towards a new 52-week high and an all-time high. So, and it has consolidated around this area, made 4 or 5 attempts over the last 3 months around 1600, 1610. So this could be the one which could go ahead and make a move towards 1700, 1800 in the short term. The second one would be a Hero MotoCorp, which has also consolidated well around this 2950, 3000 mark, trying to make first another move today about 3050, 3060. And then finally, it is Ashok Leyland, which has also consolidated after the breakout about 170. went up to 190 odd and now made a base around 180. So if that crosses 190, that would be a fresh breakout and a stronger move in that case also. So these three names look interesting, and rest of the names have continued to be in momentum. Something like a TVS Motors does not really pull back, or a Bajaj Auto. But in terms of risk reward, you'll go with M&M, Hero MotoCorp and Ashok Leyland.
Let's talk some of the individual trends as well. And look at the oil sensitives. They are clearly the ones which are at the bottom of the heap when it comes to the F&O universe. IOC is now down 3%. There's HPCL as well, which is down nearly 3%. There are the tire makers like an MRF, Apollo Tires, both of those stocks down over 2%. And the Interglobe Aviation as well, facing the heat, that's also down about 3% as we speak. Kunal, any opportunity to short, be it OMCs, be it Interglobe, or for that matter, tire names?
Yeah, so OMCs, IOC is a good short. I think at 92 levels or below that, that's a stock showing signs of weakness. Even the tire names, and I specifically believe Apollo Tire could actually be a good stock to initiate fresh shorts. It's closing in towards its 200-day moving average, has already peaked out or had already peaked out, I think closer to 430, 440 levels last month or in the month of, at the fag end of the month of July. And from there, the stock has been consistently correcting. So I think eventually these stocks, they tend to reverse their correction after they break down below their 200-day moving average, which I think is a margin of at least another 20-25 points for Apollo Tires. So you can expect the tire names to go through a second round of correction, and I think Apollo Tires could be one of the prominent stocks in that regards.
Okay. In fact, since we're on the subject, let me also take it across to Somit and try and understand the crude sensitivity to various sectors as well a little bit better. Somit?
Well, yes, Brent crude is trading around $94 per barrel, which is at a 10-month high because of production cut that Saudi Arabia and Russia have extended. Now, because of this, the most negative impact we are seeing is on oil marketing companies, because with rising crude prices, the gross marketing margin for these oil marketing companies come down significantly. In fact, if you see at the end of June ended quarter, the oil marketing companies were earning a gross marketing margin of around 13.7 rupees on every liter of petrol that they were selling. Now, this has come down to just 0.9 rupees per liter, and on diesel they were earning around 9.1 rupees per liter, which is now negative. In fact, they are losing out on money on selling every liter of diesel, and that is up to the extent of rupees 6 per liter, and hence it's the biggest negative coming in for the oil marketing companies. For oil explorers like ONGC and Oil India, this is usually positive. With every $10 per barrel, with every $5 per barrel rise in crude oil prices, their earnings go up by around 7 to 12%. But going ahead, our government is likely to increase the windfall tax on crude production, so the impact would largely be neutral for these companies. When it comes to paint, aviation, lubricant manufacturers, tire and cement companies, nearly 40 to 50% of the total raw material cost is either directly or indirectly related to crude, and hence a rise in crude oil prices will definitely impact the margins going ahead. Then there are a host of specialty companies which also get impacted, with the likes of Deepak Nitrite, Aarti Industries, Balaji Amines, Alkyl Amines, Camlin Fine Science. A major raw material cost of these chemical companies are also related to crude oil prices, and hence a rise in crude oil prices will definitely impact the RM cost or the raw material cost for these companies with a lag effect and impact the margins going ahead.
Okay, thanks Amit for that. And since we are discussing the shorting ideas that were coming up on account of course, crude prices and other reasons, let me ask Naresh about the FMCG sector, because for the last many days that has been underperforming. Are you finding some shorting opportunities there, or you're looking at buying the dip?
So first of all, given the low beta nature of the sector, it is tough to short, because shorts need a faster move, and this sector does not really fall off really fast unless there is a trigger. So, and if you look at it, you're getting a small breakdown on a HUL or a Bajaj consumer, etc. But these are not places you want to go short. So the only case which comes up in terms of a breakout is Tata Consumer, which is more like a breakout at a new all-time high. But again, there are news around the counter, so that makes it a little risky in that sense. But overall, this is a sector well avoided right now. It had its glory days, but now there is no momentum as such for a trader.
Yes, doesn't make sense to short a sector which does not see a lot of momentum. But you know what, since PSU banking space is the one which is seeing the maximum traction, why not listen into biggest PSU banker, that's Mr. Dinesh Kumar Khara, who he talked about how the credit growth is likely to be 12 to 14% going forward, and the fact that the momentum ahead of festive season has been strong. Listen in.
As of now, our credit deposit ratio even at a global level is also somewhere around 72%. If we look at only the domestic, we are at 65%. We have enough buffer available with us to support the growth requirement of the economy, and we are only ensuring that we pick up the assets which meets our risk appetite, and that is something which our major focus is. So I think we have the required ability to support this kind of a growth, and my normal expectation is that we should be growing somewhere in the range of 12 to 14%.
So 12 to 14% you guided for. I'm again being very careful with words here. When your assumption for GDP growth is sub 7. Next year assumption, according to Mr. Khara, is going to be sub 7 plus. So 12 to 14 should become 14 to 16 then. I'm trying to get maybe a headline from you.
No, I'm only trying to say that maybe if at all it is 6.8, it would be around 12. But if it is at 7% plus, it would be at 14. Okay. So the range remains the same.
And SBI has historically beaten the market. So then if I add that as a factor, then 14 should also be beaten.
Let us wait and watch.
We've seen a war of liabilities. Something where you've always said, look, the smaller banks are suffering, but for SBI, because of the SLR and the other tools we have, the impact would be minimum. Now that the war in liability, according to you, is settling down, what happens to SBI?
Well, as far as the liabilities are concerned, apart from the war, we also look at it from the point of view that liability is more of a franchise. So we have got large customer base, and we must ensure that their interest is protected. So with that in mind, we have been tweaking the interest rates here and there in some of the buckets, more so in the fixed deposit, and to ensure that we should be in a position to cater to such investor depositors base through offering a inflation adjusted returns also. So I think having said that, we are having a very clear focus in terms of improving our CASA one and improving the CA component of the CASA. Traditionally we used to depend upon the government deposits, but of late you would have observed that the government is also moving towards the just-in-time funding of the accounts, and that is one of the reasons why we have started, actually for about 6 months plus now. We had recalibrated our strategy, and we started looking at the trade commerce industry and the transaction solutions in a very big way, and we have already started seeing the positive results of that, and that gives us a hope that maybe the CA component of the CASA will improve.
The asset quality gross NPA level, our target for this year is to bring it to less than 4, maybe 3.75 by the year end, and in net NPA our target will be less than 1. So sub 1 basis will bring it maybe 90 odd basis for after this financial year, 31st March 24. That is internal target, keeping in view the way the recovery team, the way our monitoring team is performing, and internally we have kept a target that our recovery should be more than our slippages. So banking on that, I am quite hopeful that our net NPA will be less than 1 and our gross NPA will be less than 4 by the year end.
Okay, that's the take coming in on the PSBs as well. Naresh, we often debate about whether it's time to bet on the large private banks, the likes of HDFC Bank, which you're also extremely bullish on, or bet on the PSBs.
The view has been the smaller PSU banks have broken out and they've done better. But they have very low weights and high volatility as such. But clearly the leadership is in terms of momentum there in the PSU banks apart from SBI. So we are seeing new 52-week highs on a PNB or a Union Bank of India or a Bank of India, even a IOB or UCO Bank. So clearly as of now the momentum is there. And even in the large private banks, it is clearly Axis Bank, IndusInd Bank, which have shown momentum. Even a federal bank is at an all-time high. So the laggards continue to remain on HDFC and Kotak. But out here, looks like they could be bottoming out HDFC and Kotak and be making a slow and steady recovery. So the whole banking space looks interesting. The momentum as of now is PSU banks, the mid-cap and small-cap banking names. But going forward, it could shift towards the large-cap private banks as well.
Taken, those are the banks that one need to watch out for. Just wanted to quickly highlight New India Assurance. That stock has suddenly spiked 9%. You also have Mazgaon Dog, Garden Reach. They are doing okay. And apart from New India Assurance, actually GIC as well is perking up. Not sure if there's any news flow around these insurance companies, but we'll watch out for that after this very short break.
Okay, back with closing trades right here on ET now. And guess what? We're at 20,200 now for the Nifty, powered by autos literally this time around. So Bajaj Auto, Hero MotoCorp, M&M, Tata Motors, the entire space is chugging along quite nicely. Of course, there's contribution from IT as well. So you've got a good move coming in on TCS, on Wipro, HCL Technologies, HDFC Bank as well is participating in the move along with ICICI Bank, Axis, Bajaj Finance. They're all holding out very smartly. And then, of course, Bharti as well is making quite the dash today, 1.6% higher. And one can't miss the traction and idea, but that, of course, is outside the index. Ashutosh Bhargav joins in on the show right now from Nippon India Mutual Fund to talk about what his take on the market is. Ashutosh, hi, afternoon. Good to have you today on ET Now. While we're counting down to, actually not counting down, we're already there at 20,200 on the index. What's the word on the broader markets though? Do you think they're ripe for a correction?
Hi. So definitely, last 6 months, the kind of rally we have seen in the broader market, the price value gaps across many sectors, I think that has narrowed. So any untoward news related to either local factors or global factors perhaps would mean that overextended market in the short term are prone to some profit taking. So risk could be from slightly higher crude prices from already where they are, or some other local news flow going into next quarterly earnings. I think the upside from the broader market at this point of time, after stupendous last 6 months, I think that seems rather limited to us.
Okay, so in your multi-cap fund then, have you changed your allocation in terms of what the exposure is to mid-cap versus, let's say, large cap? And also in terms of the cash levels, how are they trending?
Typically at a house level, we don't take much of cash calls. We prefer to remain invested and don't take large cash calls in most of our portfolios. In multi-cap strategy specifically, we need to keep 25% of the AUM in all the three size categories. And there we have, rather than tinkering with the overall allocation in terms of size categories, we have looked to add some kind of defense in the portfolio, some defensiveness in the portfolio, by incrementally adding more consumer names and booking profits in some of the erstwhile domestic cyclicals. We made a significant amount of profits. So we are trimming down on some of the cyclical names, adding some defensive in the form of consumer names and utility names. And that's how we are kind of, preparing ourselves for any potential bout of volatility there.
Ashutosh, I also see that you guys have managed to kind of play the industrials through a lot of these under-owned names, the likes of Kenna Metal India, Vesuvius India, and even Linde India for that matter is a large holding. What's the thought as far as industrials and these stocks are concerned?
So when we think of industrial, you need to also think about the alternatives that we have in the form of the global demand and global pricing related sectors. That's where our view is slightly negative. We think domestic cycle is relatively well poised versus the kind of challenges that we are seeing in broader global demand and global pricing environment. And within domestic demand, we think, CAPEX is relatively better placed in terms of overall demand outlook as well as the pricing power. So consumption is something which is where we think there are some demand related challenges. There is higher competitive intensity. Wherein industrial, which is the kind of the remaining block in the market, that's where we see that, the order books of the companies are improving. The medium-term outlook is incrementally becoming better across, equipment providers and even some of the infrastructure names. So, on a relative sense, despite the run-up, we prefer to look at some of these capital goods stock where medium to long-term prospects remain still healthy. Although some of the attractiveness are already priced in terms of higher valuations now, and therefore we are incrementally, and some of the names that you're talking about, incrementally booked some profits and deployed that in relatively less cyclical segments like consumers and utilities.
So outside of these spaces, where is it that you are still recommending fresh buys?
So as a house, we have incrementally added positions in power sector in general. So utility companies, some of the lenders which are specifically into that segment. And we remain constructive on the equipment side, and other than the generation side, we are equipment side, the transmission companies. We think in terms of taking differentiated bets. And which is where, as a house, we in 2 or 3 sectors we take a significant differentiated bets vis-a-vis the benchmark. And power is one segment. That's where we have recently added a lot of position across the sub-segment that I have mentioned, because we think we are at the start of a multi-year, power demand supply imbalance, and that's where you will see a lot of pricing power for the utility companies beyond the regulated segments. And also there will be a lot of demand related to capex. So we are trying to play this whole power story as a pack with these segments. And this is where we think even fresh money can be deployed from medium-term perspective.
So you have allocated, additional money to the power sector and see a lot of value there, and a multi-year upcycle is what you are talking about. But just wanted to come back to the point when you were saying you're trimming positions in cyclicals and adding it to consumption. But which vertical of consumption? Because staples clearly is not doing well. I do see a couple of hotel stocks in your portfolio, EIH, Indian hotels, etc. Apart from hospitality, is there any other vertical in consumption as well that interests you?
We have incrementally added some bit in even in FMCG segment. There the idea remains that the input cost pressure has receded. In fact, there are some tailwinds that we are seeing. This being an election year, there is some bit of populism that is also there in the system, and which perhaps could help in the rural consumption or consumption at the lower income of these strata. So. And also, we were a bit underweight on these segments, and to provide some kind of balance to the portfolio, we are cutting down on some of the underweights in this part of the consumer segment. Apart from that, within the consumer segment, we continue to play premiumization through retail, QSR, some of the alcoholic beverages names, other than the hotel and hospitals that you could see in our portfolio. So, one end, premiumization of consumption that we have been playing for quite a long period, will still remain constructive, but incrementally adding some of the basic consumption segments like FMCG, because we think this is a time that we need to take out some of the cyclical risk from the portfolio and add some balance to the overall portfolio. And this is the way we are playing it.
To chat with you. Thank you so much, Ashutosh, for taking the time out and speaking with us. Okay, let's quickly take in the closing trades as well on that note. Kunal, let's have your list.
So HDFC Bank is something which highlighted, I think, at 1600 odd levels, even at 1650 on the futures, would continue to hold on to the trade and expecting the stock to come back towards at least 1700 mark over the next couple of days, hopefully.
Right. Naresh, what's on your list?
So that's about Bandhan Bank. The stock has finally seen a reversal with strong volumes. A lot of fall starts around 235, 240. Big candle move today, so indicates finally a move is in place, could go towards 270 plus.
Right, okay, we'll slip into a very quick break on that note, but here's some good news for all the Apple fans. Anisha, you're still not converting to Apple, are you?
I don't think it's happening in this lifetime.
Not even 15?
Nope.
Okay, well, the bookings open from today, the pre-bookings that is. So let's take it across to Astha and find out how the buzz is outside the Apple store in Mumbai.
iPhone models have once again ignited the excitement of people across the globe with the launch of iPhone 15. But here's an exciting news that the pre-bookings of these devices starts today at 5:30 p.m. People have already started visiting stores and online bookings are already happening to secure these devices. Now customers will have these devices in their hands on September 22nd. This week, the veil was lifted off on the pricing of the latest offerings. The entry model to the new series, the iPhone 15, is worth rupees 79,900, and the most expensive model, that is iPhone 15 Pro Max, is of 1,99,900 rupees. Now let's see what is the excitement among the people for the iPhone 15.
Well, the momentum is continuing on the upside. 20,200 has been scaled, and since then there has been an uptick as well. Can we quickly pull up the chart of HDFC Bank and see if there is any move on that? Because remember, it was the last half an hour that was expected to see quite a bit of inflow, and that was on account of the FTSE and Sensex readjustment that was likely to happen. In fact, not just HDFC Bank, there are a whole host of other counters as well that might see the impact of inflows and outflows. Let's go across to Somit to get that list.
Well, on the back of rebalancing, HDFC Bank is the stock that would remain largely in focus because nearly 562 million of US dollars are expected to come in as inflow in HDFC Bank, which is nearly 1.5 times its average daily volumes. Other than that, there is AI Engineering, which is expected to see an inflow of around 31 million US dollars, which would be nearly 7.4 times its 20-day average volume. Then there is Sanjeev, Capri Global, and Exchange, Usha Martin, Safari Industries, and Tamil Nadu Mercantile Bank. These are expected to see an inflow anywhere between 8 to 20 million US dollars, which is more than 2 times that 20-day average volume. On the side of outflows, Hudson Agro would largely remain in focus because the outflow is expected to be around 12 million US dollars, which is nearly 13 times its 20-day average volume. And in case of Brookfield REIT, the outflow is expected to be around 7 million US dollars, which is nearly 4 times its 20-day average volume. Apart from that, there is Bajaj Finserv, Infosys, and HL, which is also expected to see an outflow in the range of around 18 to 56 million US dollars, which is less than 1 time of that 20-day average volume. So keep an eye out for these stocks in trade because the inflows are expected to come in right now.
Okay, that's the take coming in on all the rebalancing which is going to take place, and HDFC Bank is surely going to get a large part of that inflow. But can't take your eyes off from what's happening within ICICI Pru Life, Ipca Laboratories, Indus Tower. That, of course, is a big mover, along with Idea, which is now scaling higher by about almost 8%. And, of course, Bajaj Auto continues to sit on its gains as well. Naresh, you wouldn't recommend trading Vodafone Idea, would you? This is quite a move there, almost 8% high.
So technically, the stock has started giving a breakout above the 9 mark, then about 10. It was pausing around this 11.5 mark for the last 4 sessions. So technically, yes, it's a buy. Just that the risk reward is a little difficult here. But if one can take somebody has a risky bet here, it's a buy with a stop loss below 11.4. And this could go towards 12.5, 13 mark. So it's the 1:1 risk reward. I would rather prefer a Bharti Airtel or a Indus Tower in the same sector.
I prefer Bharti Airtel as well as Indus Tower for a trade rather than Vodafone Idea. But Kunal, from the IT sector, which is the stock that you would recommend a buy on?
So I'll go with large cap TCS and Infosys at current levels. I think both these stocks have given fresh breakouts this week itself. TCS breaking past about 3,525, 475.20 hurdle for itself, completing a bullish flag pattern. So that's again a strong indication that large cap IT stocks are getting back into the line of covering up the underperformance. Even Infosys has managed to do pretty well. In fact, there was a slight edge in terms of a breakout for Infosys with respect to TCS, but then on a net-to-net basis, at the end of the week, both these stocks have done relatively well. Infi at 1,500 plus mark also looks attractive for at least another 5 to 7%. So, because of the solidity of patterns, we would expect lesser returns, but the probability of the returns or the stocks reaching those target levels could be pretty much high.
Kunal, what about Tech Mahindra, HCL Tech, Wipro? Because these were the stocks a lot of people had latched onto, especially Tech Mahindra and even Zensa Tech, etc. from the broader markets. Would you recommend booking profits, or the uptrend is likely to continue?
No, so the uptrend would continue over here, but when we are talking of fresh breakouts as compared to the ones which have been existing, and especially at a time when the IT sector is getting into a turnaround, and I think if that happens, traders would tend to latch on to the fresh breakouts rather than preempt any kind of a fresh move into the existing ones, because when stocks like Infosys and TCS, when they get into that zone of a breakout, we expect them to last for a longer duration of time, even though the percentage gains would be slightly lesser as compared to the high beta stocks within the space. It's not as if the charts of Tech Mahindra, Wipro or HCL Tech have gone bearish, but it's just that these stocks have not shown any fresh signs of a breakout. We can just expect that the inertia flow would take the stocks higher even from current levels.
Okay, let's take the conversation forward. We've got Devin Choksi as well joining in on the show right now. Devin, hi, afternoon. After that bit of an aberration on Tuesday, it seems pretty great going actually. We're above the 20,200 mark and not such a bout of profit taking besides Tuesday, even within the broader end of the market. Yes, the large caps may have led the rally this week, but you're not seeing any serious damage so far within the broader end of the market. That's the small and the mid caps. What's your take on how, or rather, how one should be approaching, the mid and small cap holdings in one's portfolio now?
So good afternoon, Aisha. Well, on one side, we have the compelling reasons for some of the large cap companies to buy into the portfolio because of, I think, the languishing valuations that they are putting currently and the kind of opportunity that they are providing at this point of time. I think they are probably, becoming a more better choice, than the some of the mid and the small caps. So preference is definitely going towards large caps, even though they generate relatively smaller percentage of return. I think they still remain better of the lot, largely because of the margin of safety that they provide at the current levels. On the other side, the medium small cap companies are purely driven by the liquidity infused rally into the system. A new class of traders have entered into the market in last few quarters, and they are the ones who are the HNI traders. They typically buy the stocks based on the available liquidity in the market, and accordingly, the stock prices goes up because of the lack of depth of the stocks in the marketplace. So to a greater extent, I think the mid cap and small cap companies rally is driven largely because of the higher amount of money getting into these stocks on a comparatively smaller base of equity. That is the first point. The second point is that I think the systematically group of people would probably participate into this activity. So as a result of which, I think the rally becomes more prolonged rally into this particular situation. And I think that's the reason for which we are seeing a relatively higher valuation, disproportionate rally into the stock prices. And at the same time, I think carrying slightly higher risk compared to what their potential underlying business potential is, because of the stretch valuation that they have. One will have to be very selective in this kind of a market into the mid and small caps. Underlying story remains intact as far as the growth potential is concerned. But if you discount the stock price 2 years in advance, then possibly in between you are going to have the jerks, or maybe the margin of safety is not around, so you may have a sharp fall also into those stocks. So that is a word of caution coming out for the investors as well.
Sure, Devin, but talk to us about a few stock ideas, the areas where you are still being selective and finding value.
Well, I think opportunities are there in the areas of railways, of course, but I think more importantly, I think some of the companies which are participating into the larger growth program, say for example, the companies which are rollout for the 5G network. In that, some of the companies which are basically having the EMS facilities, there they have got relatively better amount of outlook to talk about. Companies which are into the components and the supply for the fiber optics and the networking, there also I think they are having relatively better amount of opportunity to talk about. We also like some of the mid-cap companies which are basically into the area of hospitality business, event management business, where the growth program is relatively more conducive. And also some of the automobile ancillary component companies, which are relatively looking more stable, given the kind of transition which is happening into EV as well as I think in the ICE engine, the growth program that we are seeing, particularly in the commercial vehicle space. So in respective areas where some of the mid-cap companies are getting connected to some of the larger companies, we find opportunities there into. Unfortunately, due to the restrictions, I cannot spell out those names on the screen. That is my limitation.
Sure, point taken at that. Let's hear out one of the most important voices in the state of the economy, none other than Finance Minister Nirmala Sitharaman in conversation with Times Now's Navika Kumar, talking about not just the state of the economy, but the more pressing issue, that's inflation.
We are trying to make sure that the supply side difficulties are handled. And I'm not indifferent to it. We are making sure that improved supplies reach people, and you saw tomatoes have already crashed to the other end, where the farmers are not even getting their input costs back. So there are mismatches, supply side mismatches. There is a group of ministers who look at it almost alternative days to make sure that commodities reach. And at that time too, I stood up in the parliament to answer that for tomatoes, we are procuring from Kolar and some tomato growing areas and importing from Nepal and immediately spreading. 200 rupees subsidy was given even before for all the Ujjwala consumers.
Is that all? Or do you have some more love that is likely to come out in the next few weeks?
75 lakh new connections.
That was part of the same announcement. Yes. Any more announcements?
Well, we made an announcement. See how it is working out. Particularly for perishable commodities, we have made sure that supply side problems are addressed. There is a group of ministers which looks into it in detail. Rice and wheat have been released from Food Corporation of India go down so that market prices come down. Efforts are being made to make sure inflation is contained. And for those who wanted lesser rate of tax to pay, income tax, I've brought in a second parallel system through which you pay lesser tax. And in that, people said standard direction is not being given and therefore it is still not attractive. I brought that in. So now, if you're earning approximately 60,000 rupees, you don't pay any tax at all. For 7 lakh odd, we don't charge any tax. So reduction of income tax has happened.
Okay, so that's the finance minister talking about the measures that have been taken both in terms of stemming the inflation as well as on personal taxation as well. But just shifting focus away from that, and Devin, I wanted your sense regarding the IPOs that are underway. Yatra has seen a subscription of around 0.05 times, Samhi Hotel 0.05 times, Zaggle, which is the fintech player, has seen subscription of 0.19 time right now. It's only RR Kabul, which is of course the last day of the subscription, which has seen almost 3.72 kind of interest right now. Within the names which are open right now in the primary market, have you done a deep dive on any name you want to recommend?
Anisha, at this point of time, I think we are still not, putting the effort behind these companies. I think we would like further information to come to us before we get into these companies. At this point of time, we are not having coverage.
Point taken. That's the word coming in on IPO, that right now, of course, they haven't worked on quite a few of these names, so not making any recommendations. But yes, of late, we have seen a lot of action in the primary market. And talking about the action in the secondary market, yes, that flow impact was there on HDFC Bank. Almost 4,500 crore worth of block deals happened. We saw a bit of spike then. From there, it has cooled off yet again. So that pretty much move as far as the FTSE and the Sensex readjustment have panned out in terms of the market as well. What other sectors and stocks which are buzzing around? FACT or FACT from the fertilizer space has seen a big spike. You also have Triveni Turbine, which is doing quite well for itself. In fact, wanted the take of Naresh as well in terms of some of these counters which are buzzing around. I know the volumes are on the lower side, but still Mazgaon Dock, Garden Reach, even these names like Triveni Turbine. Do you look at any of these names, Naresh?
So the other names like Mazgaon Dock, GRSC have moved way too much to actually be participating right now, or rather one should be looking to book profits. But Triveni Turbines is interesting. The stock has consolidated for the last 4 months between roughly 370 to 430 on the upper end. Quite a few attempts around 420, 430 mark. High institutional holdings here. The stock has given a breakout now of 420, 430. This could make a dash towards 480 to 500 in the short term. This looks promising. The rest of the names, one could be better off booking profits.
Okay, book profits in rest of the names, but separately, what else is happening is, of course, autos and IT. Within auto itself, Devane, where does your preference lie? Is it now tilting towards two-wheelers a lot more versus PV, and that entire SUV rush has already panned out and factored in?
I think the two-wheelers are largely, I think, driven by the festive demand anticipation. I think, and that's where probably the likes of Bajaj Auto and all have scaled up significantly in the last couple of days. I would think that the two-wheelers, probably the worst is behind them. Even on the export front, the things are looking relatively more stable than ever before. And that's where probably company like Bajaj Auto would have relatively better time to talk about. So I think that remains as a continued journey. I would think so. However, the stronger preference would remain in the auto space with the commercial vehicles. The commercial vehicles companies largely driven by the higher amount of demand due to the infrastructure spending, due to the industry expansion and the logistic demand that we are having. Along with that, the scrappage policy also, I think, is resulting into some renewed demand coming in from the commercial vehicle space. So I think these are the companies where probably I think one could see at least 3 years of clear visibility of higher or incremental demand coming in because of the requirements which will come up because of whatever I have just now mentioned. So that is where we believe I think is an opportunity at this point of time.
Okay, that's the take coming in on some segments of the market. We were just chatting about HDFC Bank. Of course, everyone's extremely enthused about HDFC Bank. But look at what's happening to some of the HDFC group companies as well. I was just looking at the charts of HDFC AMC, and that's also managed to clock in a life high for itself. Kunal, anything out of the HDFC group that you're mapping outside of HDFC Bank?
So HDFC Life is looking attractive. That's a stock which I think from the insurance pack has managed to recover. So from February lows or I think post-budget, there was a very sharp sell-off for HDFC Life as compared to most of the other insurance stocks. I think the stock had fallen down to as much as 460 post-budget. And then from there, it started to get into a recovery phase. So it's almost like a V-shaped recovery. First, breaking past about 620 levels for HDFC Life. That level was taken out in the month of June. And post that, even with a retracement or a correction from the 700 levels, that 620 is acted as a major support for HDFC Life. So I think traders can hold on to the long positions or maybe build fresh longs at current levels. 620 could be a formidable support for the stock. If it doesn't break below this level on a weekly basis, then I think we could be looking at 700, 750 plus as well for HDFC Life.
Okay, so that's the other stock from the HDFC group that Kunal wants to talk about. That's HDFC Life. But shifting focus, and it's all about Amchi Mumbai. The word is synonymous with big dreams, Bollywood, and the iconic red double-decker buses. Sadly, however, Mumbai is bidding goodbye to these double-decker buses. These buses have been an integral part of the city's public transport system for more than 8 decades now. The open-deck double-decker buses have served as sightseeing buses for tourists since the 1990s and have also played a significant role in big Bollywood dramas. Since it is all set to bid goodbye, Shanse, my colleague Shushti, is here with this report. Okay, so those were some iconic visuals. I don't think I've actually managed to travel a lot in double-deckers. Have you?
No.
I think that's the reason, because we are not the original Mumbai peoples. What about you?
I traveled a lot. Yeah. A lot. In my college days, definitely, yes.
I think we should book a ticket today itself and maybe try and take a ride, because we have
the last one's already left, right?
Should we also leave now? Just call it the day.
Yeah, just
10 minutes
more
left.
Minutes and then you can, Anisha.
I wish it was sooner.
I've always found them very fascinating because Delhi never had these double-decker buses, but yeah, never got the opportunity. But I'm sure they would have new EV double-decker buses maybe in the future.
Maybe we'll try kind of chugging along with some of those futuristic EV double-decker buses. But yes, something that I'm sure a large part of Mumbaikars can associate themselves with. But that was about double-decker. Devine, have they been part of your life as well?
Of course, I think long back in school days, in those days, I think so. We're talking about 40 years back or 45 years back journey, I think, when we used to travel in double-decker bus. But since then, I think haven't got that much of an opportunity to travel.
But now is the time to probably play that opportunity through the likes of Electra, Green Tech, JBM Auto, because these are the guys who are making commercial vehicles, if not, pure buses, as far as EVs go?
Yes, certainly. I think that sounds, I think, really very appealing to, and visually, I think, very appealing to the eyes also. So definitely, I think, given an opportunity, one could take a ride into it.
That's opportunity, Electra as well as JBM Auto too. Of course, there is all the buzz around Tesla also having to import more from Indian manufacturers, and purely report based. But it seems that Bharat Forge, Sona BLW could definitely supply components to Tesla. So let's just bring up those stocks, because I think yesterday or day before they did see quite a bit of traction. Today as well, those stocks are holding out quite well. Naresh, have you taken a look at the charts? Bharat Forge and Sona BLW?
So Bharat Forge, the stock has been trending slowly and steadily higher ever since it broke out above the 900 mark, which was the previous highs. Little overbought in the near term. I would expect some bit of a pause from 1150, 1200 levels. And then maybe after a dip, again look at it. But the longer term trend is still very, very positive. So longer term positive, near term could see a pause from 1150. Sona BLW is something which is on radar for a breakout once it can sustain above the 630, 650 mark. That's the high for the last 1 year. And over the last few weeks also, it's been getting a lot of resistance around that area. So that's the stock which is on radar.
Right. Okay, those are a couple of buzzing ones in trade. But next week, the festive fever officially in Mumbai also kicks in, and we cannot wait for our favorite Ganpati God as well. So my colleague Ajay Sharma also took a trip to the biggest destination for Ganesh Chaturthi celebrations, none other than Lal Bagh Raja, and that's been seeing millions of devotees across during the festivals through many, many years. In fact, he actually caught up with Bala Saheb Kamble, who's the chief coordinator over there, to talk about how they're gearing up for the festivities this time.
Done already all arrangements, adjustments for the festivals. So 19th September is going to be start this Ganpati Chaturthi, Ganesh Chaturthi we are saying.
Okay.
So crores of devotees within 10 days will come here. Daily 15 to 20 lakhs footfall will be here. And for that all devotees, we are making all arrangements from all sides. Their safety, their darshan, easy darshan to Lal Bagh Raja, and they go safely for their homes with their families.
Because somebody was telling me that managing such a big event, 15-20 lakh people flocking every day, crores, lakhs, it itself is a very gigantic task. Yes. So how many people do you have in your team, in your organizing committee? How do you manage such a, it's a logistical nightmare, right? But you're smoothly able to do it every year. How do you manage it?
We have teams for each and every arrangements. So we have security force, we have all CCTV cameras here for the protection, for the safety of the all devotees. We have, our housekeeping team is there. All our Swayamsevaks, social activities, they are working here. Then our organizing committee, stage committee is there, main gate committee is there. Suppose many VIPs are coming to take darshan of Lal Bagh Raja. So their arrangement for the darshan, our team is working day night, 24 hours by 7. Then all other people, those who are coming for Mukh Darshan and other line is for Charan Sparsha. So there are too many pandals are there, and each and every pandal there is a sitting arrangement for each and every devotee.
Okay, so that was about Lal Bagh Raja. Of course, we'll all wait by and watch that, how that unfolds in the next week. But for now, what's unfolding is the breakout in Triveni Turbine. Naresh was pointing out that the charts look very strong, and that up move is also something which is actually gaining momentum now, 10% higher for that stock. Within industrials, and I know, Devane, you've talked about railway stocks where you're still seeing value, but within these industrials, capex theme, the smaller names, anything that you would want to point out in terms of which are the stocks which make for a good buy?
Well, I think importantly, the companies which are basically into the ecosystem who are supplying to different other industries, particularly in the capital goods segments, which I mentioned earlier, I think into the EMS segment particularly, they are the ones who are suppliers to the capital goods segment players. And capital goods segments players are ultimately getting linked to the infrastructure space. So starting with infrastructure, of course, but I think in capital goods segment and into the EMS segment, some of the companies definitely looks, I think, interesting and appealing. Again, for the same reason, I can't disclose names or talk names on the screen. That is a limitation that I would like to express.
No, sure, Devin, totally appreciate that limitation. Thank you so much for actually joining us today and have a nice weekend. For the time being, the markets are actually cooling off quite a bit. Actually, in the last few minutes, there has been a reversal of almost 40-50 points. Not really a reversal, but a bit of a dip is what we are seeing. Actually, let's try and define that, Kunal. Dip, correction, reversal?
Weekend profit booking maybe.
Is that what you are doing right now, planning for the weekend and kind of...
Considering it's a truncated week next month.
It's a truncated week.
The next week,
yes.
Yeah,
okay, okay.
That's actually the most important cue that I want to talk about in the next week. Of course, there's FOMC meeting which is lined up. A lot of IPO action as well. There's Bank of England as well, which will be seeing their policy action. HDFC Bank Analyst Day is there at the start of the week, so we'll watch out for that. And L&T buyback tender offer actually opens up. And apart from that, yes, it's a truncated week. Tuesday is a holiday.
Yes, it is, and we are not closing badly at all. Yes, may have eased off a little bit from the top, but we're still closing above the 20,100 level. This has been a historic week in that sense, right? Monday, you started off with a life high on the index. You had the Sensex as well catching up. Broader markets did see a bit of an aberration, but didn't quite sustain after that Tuesday's dip down. So from there, it's been quite a steady shift that one has seen. Today, of course, the likes of an Idea, Indus Tower, they've been seeing big spurts. You've got a Bajaj Auto, Hero MotoCorp, M&M. They've all looked extremely strong, along, of course, with Tata Motors as well. Banks really came to the fore as well all through this week. And HDFC Bank clearly is being considered as one of the preferred bets from most of our experts across the board. In fact, why just, HDFC Bank? Other than Kotak Bank, even IndusInd, Axis, SBI, and the smaller PSBs as well find favor with the market men. Technology as well has made a comeback. You've got a couple of brokerages as well upgrading and coming up with their notes on some of the individual names, TCS being a case in point, which has closed in with a gain of about 1% in trade today. Sugar saw extremely strong move all through this week, and we'll just check in on that. Yes, crude continues to be the niggling worry, and we've seen some of the OMCs and other sensitives feel the heat from that. But that's it. We're going to wind it up for this week, and we will see you again with all the market action on Monday morning.